Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Monday, July the 9th, 2012. Well, a continuation of the trend to the downside today in a candle with a lower high and a lower low. Close below the previous close, showing the sellers are keen, but the distance of the close to the previous close compared to the same price action on the previous day is much less. So the sellers were much keener on the previous day than they are, so we are seeing the sellers lose some momentum on that count. We also have a very small black body. Previous day's trading, we saw a nice extension of the size of the black body from the previous day, which meant that the sellers had increased their downside momentum on the day between the open and the close, and today that's dried up, so once again a lack of commitment from the sellers to the downside here. A largish shadow on the bottom of this candle is similar to the previous day's candle, and we saw the market interact with the support area around 1347. We see here previously it acted as support, then it was broken, then it acted as some minor resistance, and now this area at 1347 is acting as support. We also have the market trading within the cloud, so we'd expect to see fairly strong support around this area. Now this black body candle is a potential Japanese candlestick reversal pattern. It's a hammer pattern, and we have a downtrend in place. Not a long period of time this trend has been to the downside, so we would prefer to see a trend of greater magnitude and probably longer duration, but still the effect is the same. And the reason that this is a potential change of trend is because of the shadow on the bottom. It represents the sellers losing commitment around the 1347 area, and they lost commitment on the previous day, so it makes that area even stronger and stronger potential for the change of trend, but also the small black body, and it means that the sellers are losing commitment, so it has set the market up for the change of trend. Now we will need to see the market close up above 1356, and that was a previous area of support and resistance, and that's an important area for this market tomorrow if we are going to see the change of trend. Now with all Japanese candlestick reversal patterns, we want to see confirmation of the change of trend, and that would be a higher high and a higher low. So the high of this candle becomes important, and then after that the 1356 area. Above there we have some minor levels around the 1364 level, and then up to around the 1370 and above, so some decent resistance up above. In terms of the Fibonacci extension, and with the market in the downtrend, we're examining the relationship of the current downtrend to the previous time the market was trending down. It was only a one candle downtrend previously, but we have seen the market react just below the 100% level. The previous day's trading, we saw the market fail to close below the 100% level at 1353. We saw a price rejection from below there. Today we've seen the market close below, but still strong price rejection, so we're seeing the market the sellers lose some commitment around that area, and that also sets the market up for that potential change of trend to the upside. Also looking at the Fibonacci retracement of the prior uptrend, and we're looking at the relationship between the current downtrend in the first time frame to the prior first time frame uptrend, and we're seeing the sellers lose commitment around the 38.2% level, which is an important level with the Fibonacci ratios, and a lot of these factors are coming together for the potential change of trend to the upside. In terms of Ichimoku, we have the market trading within the cloud now, and this is the second day we've seen the market trading within the cloud. So technically we have a neutral market in big picture terms, but the market is bullish in the medium term and fast term time frame by trading above the Kijun-sen, the pink line, and the Tenkan-sen, the green line. And just looking here at the Chica span, that's around this area here, so it's above the corresponding price action, so it's supporting the bullishness that we're seeing in the faster time frames, and it does suggest that if we do see a breakout to the upside, we could see the market potentially trade up to 1370 and beyond. We saw the bullish breakout above the cloud previously about a week or so ago. Then the market retraced back towards the cloud and find support within the cloud, which is not unusual for Ichimoku, and a very strong likelihood that the market will bounce off this area. If the market does continue trending down, obviously 1347 having been tested for the previous 2 days and been rejected by the buyers to the upside, then that is a very important level. But we also have strong support within the cloud at the Tenkan Sen at 1342. Then is 1333 level, which has been tested on quite a few occasions, previously broken strongly, but does offer itself as potential support for the next few days. And then below the cloud, down around the Kijun Sen and around 1320, and the bottom of the cloud, which now will be down around roughly 1330, will offer very strong support as well. So moving forward, strong potential for a change of trend, some resistance at 1356. If we clear that in a bullish manner, we could see the market trade up to 1370. A couple of minor levels on the way up, roughly around this 1360 to 1365 area.